morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway here at Verified Investing Studios. And yes, we are going to cover all the key nuances that you need to know for this week to make money in all asset classes. We got a lot to cover in the commodities area, the crypto markets, as well as the stock market. There is a ton to go over. So let's get started right away. All right, off to the races we go. And one of the first things we're going to do here, guys, is take a look at this. I wrote some key articles over the weekend that we have to touch base on. The first one's on Morgan Stanley, JP Morgan Chase, I should say. So here again, irrelevant about this, you guys can read it on your own time. Lots of amazing insights. It's the chart that I want to show. Now, this chart is very important. So let me summarize this. Today, you have a big event where Jamie Dimon is speaking, and basically what he's going to be talking about is his succession plans, how the company is doing. You know he's going to comment on the economy. So for me, this is something to say, okay, could this be a sell the news event? And what I mean by that is that if you look at this chart, JP Morgan Chase, JPM, has been consistently going higher, and pre-market it got as high as 207. Now, when we look at the chart, what we see is we see some key points of contention here. We see some major pivot points. And as you can see on this chart, there's a beautiful trend line connecting the high going back to August all the way to the high from April of this year, and it coordinates right in here. In addition, if we take the low from October and we connect it through these lows here, we also get that same zone. And so what this does to me as a technical trader, it's all about probabilities. And so I look at the chart and I say, wow, look at the run this thing has had from basically 175, 180 bucks all the way up to now 207 pre-market. I think it's trading around 206 now. But if it pushes up to, let's say, 207 to 208, you're now into a confluence of technical levels on the sell side. And again, it's all about probability, right? So it's about putting the probabilities in your favor. And for me, at least, this is a shortable potential level that I'll be watching today to see if maybe his comments, and it's not that his comments are going to be bearish, it's just that generally we see these things being sell the news events. For example, when Apple unveils its new iPhone, it runs up into that, and then oftentimes it sells off once it's been done. It's kind of like okay, now it's out there, we all know about it, now what's the next catalyst? There is none, so let's sell into it. So watch JP Morgan Chase today, JPM, into that key level. Now, a couple other things I want to go over here on the charts. If we flip back to the home page and we scroll down, I have to just touch base on this one, transport signal recession, which is exactly what the stock market wants, right? So if we scroll down here, and by the way, this is all available on the Verified Investing homepage. It's all free. Everything on that, including fear and greed, economic data, earnings data, charts. I've done tons of charts, as well as other pros have done tons of charts for you guys to look at and get ideas. But basically what I was pointing out in this is, number one, investors are cheering for a recession. To me, it's very hard to compute that, because for me, I'm saying, well, don't we want the economy to be good? Isn't it better to have people with jobs that are able to make money for their families? But when it comes to stocks, the Federal Reserve and the U.S. government have conditioned the investing public to want a weak economy. Bad news is good news. How many times have we heard everyone say that? So when it's bad news is good news, what does it mean? Well, basically it means that the market is cheering a weak economy because it means the printing presses would start again, in theory. Now, if we look at this chart of the transports, now the transports are a very key group. It's railways, it's trucking, it's all of these different things that are basically the lifeblood of the U.S. economy, right? It's telling you how many goods are being shipped around the country because the consumer is strong. One thing that caught my eye on this chart is that if you look at the 2021 high right up here, this is, again, the transportation index. Notice how in 2021, we have never gone back and made new all-time highs, even though the stock market has, right? The stock market is made up of a lot of companies. Majority of them are the big cap tech, right? That's just the nature of the beast. So what this tells me is, number one, we have a high and we've still made a lower high, which tells us that, again, the underlying backbone of the U.S. economy is not as strong as people think. Maybe, in fact, that they want this to be the case. But then we also have a head and shoulders bearish pattern here, potentially forming. So not only are you making a lower high, but you have another bearish pattern forming on the transports. The transports ultimately you would expect to go lower. And guess what? This is negative for the U.S. economy. Now, like I said before, apparently this is what investors want, because then the printing presses can start again and the U.S. government debt can balloon even more in a recession and maybe go to 70 trillion. Who knows how high that can go? Now, I'm being a little facetious in that way. We all know, at least people with common sense, like a lot of you guys that watch this show, we all know that this ends really, really badly, right? I mean, like, we're not just talking about, a recession. Whenever this debt bubble bursts, which is U.S. debt, which is Japanese debt. I mean, again, we're talking Japan has over 250% debt to GDP. U.S. is now over 130% debt to GDP. We look at the corporate debt. We look at the individual debt. We look at the consumer. I mean, all of this stuff ends not just in a recession, but probably a depression. But I think it's important to understand is that that could be still years away. And it could be 5, it could be 10, heck, it could be 15 years away for all I know. But at some point it ends really, really badly. In the meantime, a recession signal like the transports not making a higher high is in all fairness something that the markets are cheering, because the markets want weak data so the Fed can lower rates and the Fed can, make their balance sheet expand and flood the market with liquidity, even though buying power obviously gets hurt on that front. Okay, last chart I wanted to show you from the website, going back to the homepage, and this one, to be honest, is a eye-opener to me. Insider selling resumes in earnest here, and I want to show you this, guys. So if we go down to this chart here, and I'm going to make it bigger for us all to see. So I've covered insider selling for you guys probably the last 3 to 6 months, because I do believe it is important to take note of. Remember, insiders like Zuckerberg, like Bezos, like Benioff, like Jamie Dimon, these guys have more information on the consumer and the health of the economy than probably the government does, right? I mean, think about the amount of information that Zuckerberg has from people on Facebook and Instagram, or even someone like Elon Musk from Twitter, or X as it's called now. So one of the things that I was noting to you guys is that you had a lot of insider selling back in March. And this, if you go back here, it's massive red candles. And then we got into this period where it was very, very little selling, right? And what people don't understand, they look at that and say, the insiders are maybe not selling as much. No, that's not true. There's what's called the earnings quiet period. So earnings quiet period, insiders are not allowed to dump ahead of their earnings release. And so basically a month before a company reports earnings, or at the end of the quarter, insiders are not allowed to buy or sell their stock, because the idea is they might know something about how good their earnings or how bad their earnings are, and it would look suspicious, or maybe it is suspicious, right? And so you get this period in April where all these earnings were coming out, where you get very little buying or selling. Now look, there was still more selling than buying, and you might say, well, why is that allowed? Well, because remember, some companies don't report until late May or June, right? And so there's still companies that have a month period where they can still do stuff. But the idea is, again, look at how light it was during earnings season, and then look at what's going on now after earnings season has mostly concluded. The massive selling is resuming here. And so again, when I look at this and I recognize that in 2021, that was the last time insiders were dumping at this level, I put 2 and 2 together and I say, listen, it doesn't mean the markets can't go up a little bit higher. Again, we still have a market that is buoyant. The retail crowd is buying, but you also have to take this into account in your thesis, in your risk assessment of the markets, and that's exactly what I do. Okay, so I thought that was good. By the way, one more interesting stat that I wrote about this weekend is that fund managers increased their exposure to long-dated bonds by 7% in this latest month. Now, that's a big exposure increase, and essentially what that means is, number one, they expect interest rates to come down, so the economy to weaken, so interest rates, so they're locking in these long-dated higher yields. It also tells us that they're saying the stock market is not the place to be, even though retail continues to buy the stock market. Okay. All right, so on that note, before we get into charts, I do want to do our quick drawing here. Remember, token metrics was what the chart landed on, or the wheel of appreciation, so someone's going to win token metrics here. And again, token metrics, an amazing sponsor here at Verified Investing for the wheel of appreciation, giving away literally a multiple $1,000 product here on this one. And the winner today for Token Metrics 1-year membership is SUKH Preet, so Sukhpreet 779. Congratulations, buddy. Reach out to Lawton at verifiedinvesting.com and get in touch, and we'll get you all squared away. And don't forget, folks, if you're a sponsor out there and you want to sponsor the game plan, we have lots of different options, whether it's the Wheel of Appreciation or being a bigger sponsor. You let us know. We are here to make that happen. All right. Next up, let's go to the charts, guys. So into the charts we go. And if we bring it up, I want to do a quick rundown of the S&P 500. So basically on Friday, what did we see? Well, we saw the S&P 500 here closing. I think it closed right around here. And so in the overnight or on Friday after hours, we were trading neutral to positive. Then we continued up this morning. We are seeing a little bit of a pullback, but if you look at where we closed and where we're currently trading, we're still net positive. Now, last week was the lightest trading week in volume on the S&P 500 since Thanksgiving week back in November of 2023. And remember, that was a week where Thursday the markets were closed for Thanksgiving and Friday, I believe, was a half day. So it shows you how light the volume is now that we've kind of got through the major earnings, the Fed decisions, and so on and so forth. And yes, this week has NVIDIA earnings, but that's probably going to mean that volume today, tomorrow, and Wednesday before those numbers are very, very light. But either way, markets S&P trading up ever so slightly here. If we go to the daily chart, the only level I'm following here is a trend line going back to the 2007 highs. And again, if we connect that high out here and we look at this, we can see that we're still almost there, but we're not quite there. The level I have, which is this trend line, is around 533, give or take, right? So again, we're trading pre-market. We got up to about 530 and a half. Friday, we got up to 531 maybe, but we're still not there. Doesn't have to hit exactly, but in general, that would be once we get there, I guess I would go on higher alert to see how the markets react at that technical level. All right, next up, let's go to a couple things here. The 10-year yield. Again, I called this beautifully in this game plan. We talked about the short up here on yields, the drop, then we got the bear flag, the breakdown. You guys know what's happening right here, right? If you follow these game plans, you probably know this. It's what's called a retrace to the scene of the crime. So you're seeing yields rallying up, going right back to this level. It was support here. Now it's resistance. I would expect a rejection of that level. That level to me looks around 4.5%, maybe just a little bit above 4.5% on the 10-year yield. So maybe a little bit more upside there. The dollar, after a little bit of a downshift, is also bouncing. But honestly, after a bounce, I expect more downside on the US dollar as well. Again, we had this nice breakout here, right? Breakout, and then we've come back in, little bounce. My guess is we're headed back to this trend line here, which is around just below the 103 level. All right, next up, guys, touching base on NVIDIA. NVIDIA reports earnings Wednesday after the close. You can see that we're basically going in this kind of, this almost a channel. I would consider it more of a wedge pattern, even though it's a very slow condensing wedge pattern. But you can see, again, if you take this low here through this low, we then hit here and we kissed it right here. So there is a little bit of resistance, plus we have our double top right up here that's adding additional resistance. Now listen, on earnings, this thing could blast right through, or it could also dump out massively, break this support, and go way down like this. I will say this, is that this morning there were about 3 different analysts that upgraded their price targets on NVIDIA. So it's kind of building in that NVIDIA is going to have a blockbuster quarter. I actually agree with that, but the quarter itself is not a big deal to me. It's going to be watching what their margins are. Can they maintain 77% margins? If the margins are coming down a little, are they just coming down a hair? I think maybe a hair would be okay. If it's down to 70% or 68%, that would be very, very bad. So there's things like that. But there's no doubt that the chips that these guys make are in unbelievable demand. It's just about those margins and the competition that's coming and what the company guides to. But they're going to have to keep the stock up here and go higher, they're going to have to beat by a mile. Not just beat earnings. Like, I mean, I think it's like $5.54 per share. I would say they need to come in well over $6 and revenue well over $26 billion. And also, they have to show that margins are not contracting much at all, if not anything. Okay, so those are your levels there. Zoom reports after the bell today. This is actually one of my favorites, but by no means does that mean it's going to go up on earnings. I want to be clear on that. Earnings are always a wild card. The only thing I like about it is that it, number one, basically trades at a forward 12 PE, which is relatively cheap on the S&P 500. No one expects anything from them, which I love. I love when expectations are low. And if you look at the history of the chart, it's down in the lower ranges. So there's a bunch of factors here that make me say, okay, well, yeah, it could go down 10%, but it also could start the beginning of a bigger run that could go up 50%. And so for me, at least, I'm willing to take that risk. I do have a position on the long side, and I likely will hold it into earnings today in the after hours. We'll touch base on it on trading the close. Palo Alto Networks also reports after the bell today. The stock has a gap fill here and a technical support here. This is one of those which is what I would call in no man's land, meaning that you're not at support and you're not at resistance. And so it could go here or it could go up here. To me, this is a no touch. I have no good technical guidance on which way this is going to be. And remember, it's not what I think, it's about what the charts are telling me. And if the charts aren't telling me anything good, then I stay away from it. Okay, guys, on that note, what I want to do is I want to come over here and I want to do the Wheel of Appreciation, and we're going to do that spin, and then we're going to thank our amazing sponsor, Lux Algo, who just continues to be one of our biggest supporters, and their link is just below here as well if you want to check them out. But let's do a spin. Whoa, there you go, guys. Winning Trader Series right now on the website is $10,000. So that is a big one, guys. Big giveaway. That's a 20-hour course. Literally everything in here is in that course. It is really the essence of everything I do. You want to be someone like me that talks about all this stuff and looks at probabilities. It's all in there. So congratulations to whoever the winner is tomorrow of this. Again, that is the Winning Trader Series. Now, on that note, I do want to just give a special shout out to Lux Algo as I continue to work with them on multiple algos for their platform. Hopefully, we'll be launching that in about a month's time. I know it's taken a little bit longer from when I first started talking about it. But either way, guys, we're going to take 30 seconds to thank them, and then we're coming right back.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, we are back, guys. So right into the action, we're looking at Bitcoin. Now, Bitcoin is following everything that I've talked about prior here in terms of the near term. We talked about this channel being slightly bullish. We talked about the inverse head and shoulders being potentially bullish as well. There was your breakout. Target 1 would be right up to that level. We are approaching that $69,000 level now, all right? So we're trading at 67,000 and change. I would be somewhat surprised if we don't at least touch 69. Then the big test becomes, can it break out above this level? And again, for me, a lot of whether or not it breaks out is going to be how does the stock market react. And I know a lot of people in crypto, they don't want to have it tied to the risk asset markets, but honestly it is. I mean, if you look at when the stock market topped and when Bitcoin topped, it literally was within a week of the top on each. I mean, that's when they both topped. So there's no doubt that that's the case. The only bump, like if you're a bear on Bitcoin, the only bump you could make would be that the NASDAQ and S&P are hitting new all-time highs and Bitcoin isn't. But Bitcoin sometimes can lag a little bit and it can play catch-up. Now, the one thing on the bearish side that as a technical trader you want to be aware of is that if you ever break this down here, this down-sloping line that you can see, it hit it here, and it hit it here. If this ever breaks right here and you start trading below that, that would be a breakdown of the bullish pattern, and that would be a negative. But as long as you stay within here, it's net neutral to positive, and any sort of break above here, I think you honestly head to 74 and maybe even higher than that. Looking at other cryptocurrencies, Ethereum is just staying in a beautiful wedge pattern right here. Again, all we're doing here is taking these lows going back here to these lows here, all the way through these lows in this vicinity. That gives us our baseline for if we break down, we know it breaks down below that level. And then from here at the top right here, if we break above here, then you get a breakout on the chart. And you could start, honestly, you could probably trade back to this pivot here and then maybe back to here. So those would be your two upside resistance levels on Ethereum. One chart, I did take a trade over the weekend with Smart Money crypto members here. So again, you guys know I run Smart Money crypto. I have Smart Money commodities and miners if you're into commodities and action there. Lots of good opportunities in commodities right now. We'll take a look at that. And then Smart Money stocks and ETFs. And so you have your pick and choose of whatever you're into. But one of the trades that I took over the weekend was a short on Chainlink here. And I'll just show you why, right? So number one, you just look at this chart, right? And if you look at this, we have this high, right through here, you broke out, and then you kind of came close to it here, close to it here, close to it here, here, and here before breaking below. So just pure and simple. You guys know I love to keep things simple because that's how I comprehend best, frankly, is that if price had come back up to here, what's the idea, right? I mean, we know when it was below, it would get rejected, right? When it was above, it would bounce, right? Right? So then the idea is that just keep it simple. If it comes back to that line, it should get rejected and pushed back down. Now, remember, I'm a swing trader, so this means nothing about where Chainlink is in a month, 2 months, 6 months from now. I honestly couldn't care less. But the point being is, as a trader, this would be a pullback level. We got in above 17 bucks. It's already back to 1647. It's just playing the probabilities in the short term, and that's what I love to do, folks. And I know if you're watching this, you probably are intrigued by it as well. So nice little so far in the money trade from Smart Money Crypto. Hopefully we'll continue to see that play out in our favor. Looking at gold here, guys. Let's go to the gold daily chart. Now, gold was interesting because this morning what we saw in the overnight, I should say, was gold pushing to new all-time highs. But as of now, it's being rejected. Now, remember, we have a topping tail here, and we pierced the topping tail. But I have a question. Are we going to form another topping tail? In which case, if you don't close above this one doesn't negate this one, and if we close correctly, like if we close in the lower 25%, you get a secondary topping tail here, which actually could be very, very bearish for gold. Now, again, short term, remember, I'm a huge long-term, mid-term bull on gold. I still think it's going well north of 2,500 this year. But again, you know, I'm just letting the chart tell me. I've got to watch this candle. Does it create a topping tail today? I will keep you guys posted, maybe trading the close today. We'll look at that as well. Don't forget, guys, trading the close is at 3:55 p.m. Eastern time. I come on here, we go over the charts. What did the trading day do? How do things look? Now, here's again a chart of silver. Silver surged north of $32 per ounce. It has pulled back. As of now, if it closed here, this would not be a topping tail. It might even confirm the breakout, so we have to watch this very closely. I'll watch it throughout the day as well. But amazing move on silver, guys. And again, that $30 breakout level was a big one. I mean, to break above 30 is significant, but I do want to see confirmation of that move. Natural gas continues to push up. It's up a little bit today, not a big move. The biggest thing to me on natural gas is watching the 618. I think I talked about it with you guys last week in the game plan. If we take the high to the lows, the 618 Fibonacci retrace is this one right here, right? So this line right here, I'm trying to draw it as accurately as I can, and that's got to be that next resistance. So I'm short a little natural gas, but I'm just inching in little by little. This is what I do because I build that position slowly because of these sort of scenarios, especially with natural gas. They call it the widowmaker for a reason because both ways it can go way further down, way further to the upside than anyone thinks. But for me, this is my next ad level at the 618 Fibonacci retrace, taking that high to these recent lows, and that would be the 618. It's right around, I think it's right around 285, give or take just a little bit. All right, guys. Lastly, oil. We won't forget about oil here. Oil continues to trade in a bear flag pattern formation. So as of now, we can see this low here. Let's bring up those drawing tools. So we have this low through these lows, and notice how price fell and is now doing this. That's a classic bear flag if you know what to look for here. And for me, you know, even if it went up a little bit more like this, eventually I've got to be in the camp, at least per the chart. Just letting the chart speak to me, I'm in the camp that eventually this rolls over. And honestly, it makes a lot of sense. If the U.S. economy is truly getting weaker, then it does make a lot of sense that we could be in for some downside action on oil. All right, lots of good information today, guys. Remember, the homepage of Verified Investing is literally all free. I update stuff there. Other pros update charts, articles, data, you name it. I want it to be the best place for every retail average investor to go to, where you can get the information that makes you in the upper echelon of investors. That's my goal. I get 30 to 50,000 views on these a day, eventually 100,000. I want you guys to be the best investors in the world, and I'm going to do my best to help you get there with lots of free information as well as the premium services. All right, on that note, have a wonderful rest of your day.